So today we'll talk about Payoneer stock. Payoneer, as we can see here, is listed on the Nasdaq ticker PAYO, right? I haven't talked about it for maybe more than 1 year. But in any case, today we'll cover this stock again, this company again, because I seriously think we should keep this company, this stock, on our radar. And why do I say that? Because from what I can tell, from what I see here, Payoneer is a good business that is showing very good numbers, while the stock is trading at quite low multiples, in my opinion, at quite low valuation levels. So that's what we are going to discuss today. Before we begin, as always, nothing in this video is investment advice, okay? And with that said, let's get started. So first, what does this company do? So Payoneer is an international payments platform focused on facilitating cross-border transactions for freelancers, self-employed professionals, small and medium-sized businesses, and online sellers. So that's what Payoneer does. It's quite similar to PayPal or Stripe. Quite similar, though these platforms have their own differences. And actually, we could say that Payoneer is pretty much an emerging markets play. And why do I say that? Because as we can see here, most of this company's revenue comes from emerging markets. For instance, 34% of Payoneer's revenue comes from China, followed by Europe, the Middle East, and Africa, which accounts for 25% of total revenue, followed by the Asia-Pacific region too, which accounts for 21%, and finally by Latin America, accounting for 11%. Oh my God. Here, you can see here, 11%. So North America, the US market, only represents 10% of Payoneer's business. So that's an interesting factor about this business, about Payoneer. But that's what Payoneer does. It is a global payments platform, very scalable business, and as we'll see now, very good numbers too. So first, Payoneer is still a small cap with a market cap of $1.75 billion. Okay, however, Payoneer's enterprise value stands at only 1.4 billion, as we can see here. Now, let's keep that number in mind, 1.4 billion. Now let's take a look at this company's numbers. So, we have a company with an enterprise value of 1.4 billion, right? That, as we can see here, posted 1 billion in revenue over the last 12 months. So we already can say that Payoneer is trading at an enterprise value to sales multiple of only 1.4 times. Okay, that's not the lowest multiple on earth. I agree on that. I know many companies that are trading at much cheaper multiples than this. However, that's a very reasonable multiple, depending on the numbers the company is showing. And as we'll see now, Payoneer, actually, in my opinion at least, but I think Payoneer deserves much higher multiples than this one, than only 1.4 times enterprise value to sales. Because, first, the business is growing. In the last 12 months, Payoneer has grown 7.2%, as we can see here. In 2025, the company grew 7.7%. In 2024, Payoneer's revenue increased by 17.6%. So, what I want to say here, my point here, is that Payoneer is a company that has been showing a very good growth history. Okay, they've been growing consistently. And that's a very positive point, even with the challenging macro scenario. But okay, so that's our first positive point regarding Payoneer. The company has a very consistent growth history. Now let's talk about this company's margins. So first, as we see here, Payoneer is showing a gross margin of 84.9%. That's excellent. As I said in my video about reclaimed stock, which is another position of mine, but as I said, a business that is showing a margin, a gross margin like this, must have something special. So, second, positive point regarding Payoneer. Payoneer is also a profitable company. As we see here, in the last 12 months, Payoneer posted a very significant operating profit. The company posted an operating margin of 12.7%. And here, guys, I'm looking at the company's margins because I already know the size of this company, the size of its revenue. So what I want to assess now is this company's efficiency. So that's why I'm looking at margins now. But as we can see here, Payoneer is also delivering an excellent operating margin. Okay. They've been posting a positive operating margin since 2023. And finally, the company has also delivered net profits. As we see here, Payoneer's net margin stands at 6.7%, considering the last 12 months. So, very good business model, exposed to growing markets, very good numbers, very good margins. So, I pretty much like what I see here in Payoneer's case, while this stock is trading for only 1.4 enterprise value to sales. So, I already think that if I bought this stock now, it would not be a bad decision. Okay, so regarding their balance sheet, the company has a negative net debt, as we can see here. Their net debt stands at $340 million. So that means that the company has much more cash than that on its balance sheet. In short, the company doesn't have any liquidity problems whatsoever. So we don't have any reasons to worry here regarding debt, regarding leverage, regarding liquidity. And lastly, let's take a look at their cash generation, at Payoneer's cash generation. So as we can see here, over the last 12 months, Payoneer delivered $231.6 million in operating cash flow. I mean, considering their revenue stands at 1.07 billion, that means that Payoneer is delivering a 21.7% operating cash flow margin, which is excellent. Okay, excellent. So as I was saying, the company posted 231.6 million in operating cash flow. And since the company spent 32.3 million here in CapEx, so operating cash flow minus CapEx, that gives us the free cash flow, 32.3. So Payoneer posted $200 million in free cash flow over the last 12 months. So that means that this company is trading at an enterprise value to free cash flow multiple of only 7 times. For me, that's a very low multiple. Now again, this is not the cheapest business on earth, okay? However, a good business, a good company, very well diversified globally, right? That is growing, that has more cash than debt on its balance sheet, and that is showing excellent numbers. I think Payoneer is trading at a very reasonable price. So that's why I think we should seriously keep Payoneer stock on our radar, because I think that over the long run, this stock will likely go up. I think that if this business keeps improving, it's just a matter of time before this company comes back to this price level here, before we see a new historical high. So considering all these things, so what am I doing now? As you know, I have a very large gold and silver positions that I'm slowly selling to buy cheap businesses, cheap stocks. However, yes, it is true that Payoneer is cheap. I think that Payoneer is cheap. However, I'm still focusing on buying other names, such as Reclaim. I think I might keep adding to my position, to my Reclaim position. And in case you don't know which stock this is, Reclaim, right? Here's a playlist about it. So no, I don't think I will buy Payoneer stock right now, even though I think it is indeed quite cheap, because I will probably focus my resources on buying more Reclaim shares, more MineHub shares, probably, if it continues dropping, and maybe more Heartbeam shares too. However, I will keep following this stock with a lot of attention because if Payoneer continues falling, I think this could be a very interesting investment option. So, I think Payoneer is set to go up over the long run. This is a good business, scalable, very good margins, very well globally diversified. So, if this stock continues to drop, I might seriously consider starting a position here. Anyway, that's it for today, and see you next time.